Hello traders, my name is Logan and welcome back to the channel. In this video, we're going to be doing the market forecast for the week of October 11th. In this video, what we hope to do is deliver to you the best technical setups that we are currently eyeing up and hoping to act upon in this upcoming week, as we always do, and also the best fundamental drivers for you to be aware from, either from this previous week and also in the week moving forward. So without any further delay, let us get right into the video. So here we are, ladies and gentlemen, on our slideshow. And without any further delay, let us get right into it. So for this week, what we have coming up for our news is nothing on Monday, nothing on Tuesday. Wednesday, we're going to start the day off with some USD news at 8:30 for our CPI numbers and our core CPI numbers. 2 p.m., some more USD news for our FOMC meeting minutes. And then some Australian employment change and unemployment rate at 8:30 p.m. Thursday, just some USD news, PPI numbers at 8:30, and Friday, 8:30 USD news again. But besides that, nothing really to worry about in this upcoming week. So pretty open, considering we just had NFP in the last week. Speaking of NFP, the US economy added a meager 194,000 jobs in September of 2021, and so far the lowest this year, and well below market forecasts of 500,000 jobs added. Also in the news, WTI crude futures rose above $80 a barrel on Friday for the first time since November in 2014. Why is this important? Why am I emphasizing myself? Because we spoke about this in the last 2 weeks, and we're going to speak about it again when we look at the oil chart in the coming minutes. So, again, since the first time since November 2014, as demand outstrips supply. The U.S. oil benchmark is on course for a over 5% weekly gain, which is fantastic, and its 7th consecutive week of gains, and its longest winning streak since December of 2013. So oil is setting some records for sure. And to go back to NFP, we always talk about NFP and the volatility that follows and why you should be aware of it. We never really talked about what is NFP. We never touched on it. So what is NFP? The non-farm payroll figure is a key economic indicator for the United States economy, and as the United States economy uses the USD, which is the world reserve currency, the US economy obviously does impact the rest of the world, as we all are aware. It represents the number of jobs added into the economy, excluding farm employees, government employees, and private household employees, and employees of nonprofit organizations. So this is definitely a strong economic indicator, and that is why it provides such volatility in the markets. So our market sentiment for this week is going to be risk on still, although we did have that very upsetting jobs report on Friday. Regardless, we had some other good news with oil, so we're going to be keeping on with the risk on market sentiment right now, but that may again be subject to change in the coming weeks should more bad news come out regarding the economy, regarding the worldwide state of the economy. So we're going to be keeping our eye on that, but for now, we're going to stay risk on. So here we are on the charts. We're going to start off with Ethereum. So we called the bottom for you guys on cryptos, Ethereum, XRP, Bitcoin. Those three specifically we showed you, but this obviously applied to all cryptocurrencies. We called the bottom right around this level. Since then, we've been moving up very impulsively. Why am I showing you Ethereum? We've not reached our profit target, but we are approaching a very, very significant resistance fractal. So I'm interested to see what we do around here. We have been moving up for the last couple of days. I would not be surprised if we bounced a little bit lower and found a little bit of a retracement before continuing higher, but I'm just going to keep my eye on this. I'm expecting a little bit of a consolidation, but obviously still maintaining my overall bullish bias on Ethereum until we again reach this price target around $6,200. Oil. We've been talking about this. So on the 2-week chart, we were waiting for this 2-week candle close, which is closing in 4 hours above this resistance line, which formed since 2008. So this is a very, very important close. Is it possible this is a fake out? Yes, it is possible, but it's not probable because look how strong this bullish candle is, right? It's definitely not probable. We also broke out of this resistance fractal, so we are now turning this into support. So this is another confluence for why this is not a fake out and why we can continue to see some more higher prices in oil. Again, the Bank of America said this could lead to a macro crisis in Q4 and the Q1 of 2022. So we're going to be keeping a close eye on this, as this could be very, very important and could be a catalyst for something else. XAUUSD, I know we love talking about oil on this on this channel. So we called for a little bit of a bounce off of this. We did get that bounce originally, and then we came back a little bit lower, beneath that level, but bounced again, and now we're just consolidating. So we have found a range here, a rectangle, however you would like to describe it. It's the same premise, but we are obviously still looking for a push higher because we are still in this reversal zone as labeled down here. So my bias is bullish on gold. BTC looks fantastic. Nothing really to stay here. It's just obviously we've been very impulsive since we got this breakout of this triangle, and we broke out of this local high right here at 52.6. So this is very bullish. You know, this does tell me that we are done our corrective phase and we are now primed and ready to move into our wave 3, which is what we have. And we always talk about LE wave theory, but LE wave theory says that we have a 5-wave motive move. This is the 5-wave cycle as pictured. And right here, we're in Bitcoin, you know, we'll do a little graphic. In Bitcoin, this is where we are. Right here. So, as you can see, we had wave 1. This is this wave right here. Wave 2. This is this wave right here. And now we're just starting wave 3, which is where we are right here. So this means we have a much higher way to go on Bitcoin. And again, my price target, I know we talked about this 2 weeks ago, but my price target is going to start at 73,000 and continue to 78,000. But of course, this could go higher. I know a lot of people have their price targets at around $100,000. EURUSD, so we obviously tried to call a head and shoulders yesterday, which did actually work out if you played that head and shoulders, but it didn't have follow through. It just finished that head and shoulders pattern and then came right back down. So right now I'm looking for the $1.15 range for a bounce because that is our 1.618 Fibonacci retracement. But obviously, you know, that we might not even necessarily have to go that far. But again, that does line up with our 127.2 extension of this other wave. So that is our highest probability area of reversal in the near future. So my bias is going to be short and then long. USDJPY, I just wanted to share this with you guys because we are approaching a resistance fractal. So this is a make or break moment, and we could absolutely bounce. And either way, we're going to get a trade setup, right? So we could get a bounce off of this resistance fractal, or we could get a break of this resistance fractal on the daily time frame, a retest of that, confirming it as support, and then a continuation higher. Either way, there is a trade present. Be on your toes with USDJPY because I know I will. USDCAD, we called out this head and shoulders for you guys like 2 weeks ago and last week as well, but we are just going to be keeping our eye on this because obviously it triggered, and we're going to be keeping our eye on this to make sure that it does play out. But this was a very bearish, impulsive wave, so I would not be surprised if we got a little bit of a retracement before continuing lower. GBPCAD, I wanted to show this to you guys just because of this breakout on the daily chart. So this is a breakout from 2019, August area, where we've been maintaining this low support line. So we just got a breakout of that, a retest and confirmation before moving lower. My bias is going to remain bearish on GBPCAD. AUDUSD, this is something we've been calling out for a while. We called this high for you guys, and we said we were going to be heading lower. Since then, we have a very impulsive bearish wave, followed by a corrective move, and now we are looking for our reversal point before we continue moving lower. This is my reversal zone. As you can see, we're kind of in the middle of it right now, and this stems from the 72 cent level to the 73.5 cent level. We're going to be looking for a short entry around these levels and continuing our momentum short. NZDCHF looks absolutely fantastic. We got a breakout of this channel, followed by a retest, which lines up with our Fibonacci retracement levels, and this looks like a really, really great trade. This would be something to miss out on. This will be my chart of the week for this week, besides oil, obviously, which is huge news. But as you can see, we have multiple confluences for why this is such a great trading decision and why this lines up for our bias, which is bullish. So traders, again, that was our market forecast. I really, really hope you enjoyed and pulled some valuable insights out of this video. And if you did, all we ask is that you please follow us on all of our social media platforms because we're releasing new content across all of our various platforms every single day, and also videos just like this on our YouTube channel, and more are definitely on their way. So, as always, on behalf of everyone at Funding Talent, happy trading.